What's up, guys, and welcome to another video. So after getting almost about $1 million from both Forex and CFD prop firms, I want to share with you guys one ingredient which has been the core behind all the strategies I have used in both Forex and futures. And if you can understand this concept, you can be able to use it on any strategy to pass your prop firm accounts, get payout, or to even use on your private account and get withdrawals. So without wasting much time, come on my screen and I'm going to show you guys this. What I'm going to be talking about is more important than win rate when it comes to a strategy. It's more important than the Sharpe ratio. It's more important than even the average expectancy. It is known as the expectancy value of your strategy. Please bear with me. Very few people on the internet talk about this because they don't even understand it and they can't even explain it to you. That's why I have been incorporating this in my systems for years, and I want to put it in the simplest way possible so that you can understand. It is known as the expectancy value of your strategy. And what is the expectancy value of your strategy? It just in short tells you that even after a series of maybe 10 trades, 100 trades, 200 trades, 1,000 trades, you will still be able to make money with that particular strategy. Because the long-term game is the most important game, or the most important thing when it comes to trading. Can your strategy perform after 1 month, after 2 months, after 1 year, after 2 years? Can your strategy perform after 10 trades, after 20 trades, after 100 trades, after 1,000 trades? What is going to tell you is going to be your expectancy value. Because I've seen a situation where traders will just start trading with a strategy. Maybe they are lucky to have maybe 10 winners or 20 winners, or maybe they are lucky to have a 50% or 60% consistency win rate or 50% win rate. And then they run immediately and go and buy a prop firm account. The same thing I saw when I launched the Godlove Discipline Challenge. Traders come and say, oh, I already know how to trade. The only thing I need is capital. And bear with me, the only thing they did at that point in time, they just backtested their strategy on, say, maybe 20 trades or 40 trades. And maybe they had a win rate of 50%. And they were like, oh, I have a strategy that is working. Nope, it wasn't working. What would have told you that that strategy is not working would have been your expectancy value, which I'm going to explain to you guys today. So expectancy value, the formula to calculate it is very simple. Your win rate times your average win rate minus your losers times your average losers, all right? Or your losing rate times your average losers. Now, let's take a typical example. There's a video I did yesterday where I was showing you guys the GUMVRO strategy. And I traded that strategy for 2 days, and these were the total trades we had. We had a total of 8 winners, 3 losers, which gave us a win rate of 72%. If we're having a win rate of 72%, means the losing rate is what? Is 28%. Now let's calculate the expectancy on this particular one to see how we came to this particular answer, which is 580. The expectancy value is 580. I'm also going to show you how we came to this conclusion to say the expectancy value in terms of arrow, the arrow multiplier was 1.16. Remember, our formula is simple. The expectancy value, this is the core, whether you like it or not. If you want to get to that level where you're getting payout, you can't ignore stuff like this. You can't just say, no, bro, I'm just going to do support. And these are things you need to understand. I'm sorry, but I'll have to put it that way. Now, let's do the calculation here, right? What was our win rate? Our win rate here is what? 72%, which is 0.72. So let's actually take our pen here. And hopefully, so this one is 0.72, right? 0.72, and then we're going to multiply by our average winner. Remember, our average winner on our strategy, the GUMVRO strategy, just as we did yesterday, you can see it right up here. We're going for a risk to reward of 1:2, meaning every winner we have, we make 2% of our account, which in this case, say we're trading with a 50K account, we're risking 1%, which is $500, to go for 2%, which is $1,000. So if we can come back down here, it's going to be 0.72 times $1,000 times $1,000, because that's our average winner, times $1,000. So let's push down to see what our formula says, right? So it's going to be, the win rate, which is 0.72 times our average winner, which is $1,000, minus, very, very important. So minus, let's bring our pen, minus our losing rate, which if our winning rate was 72%, it means our losing rate is 28%, which is 0.28%, right? 0.28, all right, 0.28 times what is our average loser. Our average loser is $500. Remember, we are risking 1% to go for 2%. So if we can do that formula, we're going to have the same thing we have here, which is 0.72 times 1,000 minus 0.28 times 500, which is $720 minus $140. And the answer here is $580. Meaning, even if we took a total of 500 trades, it means whether that trade is a loser or a winner, we are expected to make about $580 for every trade. This is crazily very high. This is exceptionally very, very good. I'm going to show you guys another example where I actually did this on a sample of 1,300 trades to show you guys and what I can do on that particular sample size to increase my expectancy, and we're going to also talk a lot about that, right? So here you can see my expectancy value is what? $580, meaning for every trade I place, whether it's a winner or a loss, I'm expecting my expectancy is $580. If you are calculating it in terms of arrows, remember, what is our arrow? Our arrow is in terms of arrow multiplier. Our arrow is just what we are risking, which is equal to what? Which is equal to 1. Our arrow is just equal to 1. Meaning, if we are multiplying our win rate times our arrow, our win rate, which is 72%, times anytime we place a trade and it goes in our favor, we have 2 arrows, right? So this one is going to be, I'm going to actually use text so that you guys can see. So this one is going to, in terms of arrow multiply, which is very, very important, is going to be 0.72. And then we multiply that times our arrow, which is 2 arrow, because for every winner we have 2 arrow, right? So multiply that by 2 arrow minus what is our losing rate is 0.28 times what is our arrow. Anytime we place a trade, our average loser is just 1 arrow, right? So the answer here is just going to be 1.44, which is 1.44 minus 0.2 arrow, all right, which is equal to 1.16 arrow. Bro, 1.16 arrow. You have a strategy that is having an expectancy value of 1.16 arrow. That is totally crazy, because it's telling you that anytime you place a trade, whether it's a loser or not, or after a series of trade, maybe you are in your number 200 trade, your number 1,000 trade, every trade you place, you're going to be having an average winner of 1.1 arrow. And in our case, our arrow was $500, meaning you're going to be having an average winner, or an average amount of money you're going to make on that trade is 1.16 arrow, which is almost about $580. You can see, which is the same as the $580 we had right here. So can you see how the answers have added up, and it has given us our expectancy in terms of the dollar amount and also in terms of our arrow multiplier. So this is very, very crucial, because just imagine I had a strategy which I haven't ascertained my expectancy value and I'm using it. It's like I'm trading blindly. It's like I'm going to be working blindly, because I don't know if that strategy is still going to be performing after 500 trades. I don't know if that strategy is still going to be performing after 1,000 trades. Now, let's look at this typical example, which I took earlier in the day, or I'm just going to quickly share it with you guys, right? All right, I want you guys to pay attention right here. This is actually NinjaTrader, and the same thing is going to work if you are backtesting on MetaTrader 5, on TradeStation, on WeBChat. No matter the platform, the analytic platform you are using, it should be able to give you all this data. It should be able to give you all this data. And as a trader, all these data are useful to you. Sometimes you guys just ignore everything. You're just looking, you're just, checking to see if your trade is going to be a winner or a loser. No, all these data are important. Now look at this. This is a strategy which, one of my strategies that I'm actually building a bot around that particular strategy, right? And I'm trying to see if that strategy can actually perform over a series of data, or after a couple of months, or even after a couple of years, than just performing after a day and it doesn't perform again, after a month it doesn't perform again. So this data and me doing everything I've just explained to you guys is going to tell me if this strategy is still going to be performing next month or not. It's as simple as that. And if you can see here, look at the total number of trades I took on this particular account. 1,338 trades. All right, I want to show you guys the analysis to show you guys if this strategy can even perform in the long run or not, or what we can improve on this particular strategy. Look, 1,336 trades. Our win rate on this strategy is 40% or 41%, right? 40.94%. We are still making money because we have a good risk to reward, a good arrow, right? And then if we can go down again, let's look for our average winner. Average winning trade, that is it. That's all we need. Our average winning trade is $694, and our average losing trade is $369. Let's calculate the expectancy. All right. Let's calculate the expectancy on this strategy to see if it's going to make money in the long run or not. Remember, I say any expectancy above 0.1 arrow. We're going to calculate it even in terms of arrow. Above 0.1 arrow is very, very good. Or in a sample size like this, where my average trade is, my average winner is almost $700 and my average loser is about $369. The good expectancy in terms of the dollar amount should be above $100. Above $100 or above 0.1 arrow. So let's do the calculation to see. Let's use text. We need to start with our win rate. So our win rate here is 41%, which is 0.41. 0.41 times, we're going to multiply this by our average winner, which was $694, right? $694 minus our losing rate. If 0.41% is our win rate, then our losing rate should be, let's put 0.41, should be 0.59, right? 0.59. Good. Times, we need to multiply this by our average loser. So if we go back to our average loser, what is our average loser? 369. So we multiply this by 369. Good. And then what is our answer here? Let's go. Let's put our answer. So we're just going to quickly multiply this. This is going to be equal to 0.41 times 694, which is equal to 284 minus, so let's multiply 0.59 times 369. So that's 217. Good. So the answer here is going to be, so let's multiply minus 284. Good. In terms of the dollar amount is 66.29. All right. So that's our expectancy. Remember, we took a total of what? We took a total of, let's see. Look at this. Look at what we are talking about here. We took a total of 1,336 trades. 1,336 trades. Meaning, even if we continue using this strategy, we can be rest assured that for every trade we take, we're going to be making an average of $66. All right. So now, what is the conclusion at that point in time? Which is, you can see average trade. So the expectancy value in terms of the dollar amount is the same as your average per trade. The average amount you make per trade. Look, we did the calculation together, and even what Ninja Trader made is the same. 66.72. Our answer was 66.29. The same, $66. So you can see how our answer is very, very correct. Meaning for every trade we take, whether it's a winner or a loser, we're going to be expecting to make $66. Now, there's room for improvement on this, because normally, I'll just go back on the drawing board. Although the strategy made $90,000 within the past, you can see here, I'm just going to quickly show you guys something. This strategy was running from the 1st of January 2026 to today, to the 24th of June 2026. And within those 5 months of the strategy, 5 to 6 months of the strategy running, we had a total of 1,336 trades, and we made $90,000 on a $50,000 account. Because if you can check up here again, let me show you guys this. If you can go up again, the starting balance on this account, $50,000. Meaning this account is standing on almost about $140-something thousand, but we started it on $50,000. But I'm still not very, very satisfied. Although the strategy is doing very, very well, I'm still not very, very satisfied, because the expectancy value in terms of the dollar amount is less than $100. For a data set above 1,000 trade, I want my expectancy value to be above $100. Or for an average trade of $300 going for an average winner of $700, that's almost a risk to reward of 1:2. I want to see my expectancy to be above $100. dollars. So now I'll go back and fine tune my parameters. What I can do is I can reduce my trade frequency, because look at this. This strategy is opening almost about 11 trades per day. So I can be able to go back, I reduce my trade frequency, then I'm only going for the A+ setups. Or I can still be able to go on my strategy or my board, and then I put down trend filter to say the board should only work in a particular trend, or we should be able to have more filters that filter maybe weak trends, or maybe news filters. Or I can be able to go back and play with my parameters to be able to look for A+ setups that will be able to bring up my expectancy value above 100. Remember, I already showed you guys, we can quickly just calculate the arrow on this particular ride. We can calculate the expectancy value in terms of arrow multiplier or reward multiplier to see if it's above 0.1. Anything above 0.1 is good, but normally I want to see my arrow multiplier between 0.3 to 1. Between 0.3 to about 0.8 is what I want to see. So let's calculate the arrow multiplier on this particular strategy to see if it's something we would have even gone for, right? And remember, the calculation is very, very easy again. We just go back here and we're just going to go, we're going to do the same thing. Arrow multiplier is 0.41, which is our win rate, times what is our arrow. If we are risking 3.69 to go for almost 700, so this arrow is like 2 arrow. That's like 2 arrow, right? So it's 2 arrow, right? Minus 0.59, which is our losing rate, times our average loser, or minus our average loser times our average loser in terms of arrow, which is 1 arrow. Then this is going to give us a total of, let's quickly multiply to see, that is 0.41 times 2. So that is equal to 0.82 arrow minus 0.59 times 1 arrow, which is just 0.59. Our answer in terms of arrow, our expectancy value in terms of arrow multiplier is going to be, just subtract 0.59 from 0.82. Good. So our arrow multiplier is 0.23 arrow. Remember, what did I say? Even though my strategy is profitable, even though this strategy made $89,000 within, if I show you guys the curve, look at this analysis. If I can go here, look at the equity curve. You can see the equity curve. Look how the equity curve was very, very swift. I can even go to another higher level, which we call Monte Carlo. This is very, very advanced stuff. When you start going into algorithmic trading, remember, I started going into algorithmic trading even before AI came, right? And these are some key parameters. You look into them, right? Even though this video is not talking about algorithmic trading, but it's talking about even a strategy that you are trading manually. These are parameters you look into. If I go even on Monte Carlo and I generate everything throughout that same period, simulations, or total number of trades, you can see 1,336, and I go on generate. Let's see my Monte Carlo. Look at my Monte Carlo. So Monte Carlo is even telling me that over a series of time, instead of even that 90,000 that I made, this strategy has the capability of even making $150,000. But I'm still not satisfied. Because of what? Because my expectancy in terms of arrow multiplier is less than 0.3. I want to be very, very rest assured that this strategy over even 10,000 trades, I'm going to be making at least average $100 on every trade I take, or an average of 0.3 arrow. Meaning if I'm risking $500, I want to be going for an average of at least $100 to $150 per trade. You see, 0.23 arrow is similar to this. This is it. 0.23 arrow is $66 because $66 is 0.23 of 369. Can you see all the answer? If you do reverse psychology, if you do your calculation and you do reverse psychology and it doesn't match, it means it's wrong. It means the answer is wrong. Because 0.23 arrow is the same as $63 because $63 is 0.23 arrow of $369. Can you see that? There's room for improvement because, number one, I want my expectancy in terms of arrow multiplier to be above 0.3. And I already told you guys what I'll do. On my Monte Carlo, I can already see what I can do. And even if I go on my analysis, here, I can be able to see how the trades were performing on a daily basis. We started on the 31st of December 2025, or on the 1st of January, right? And you can see on a daily basis, so the first day we made $243. The next day we made $2,500 on the feed, which after the weekend we lose $1,000 on Monday. After that, the next day we made 2,600, 2,800, and then we see we lose like 1,000. So you can see these are our net profit and loss for the day, and cumulative. Cumulative, we didn't even have, meaning once we started making money, we just continue making money. Cumulative, we just continue growing until today, which is the 23rd, and we even made $3,000 yesterday. That's why we are having this kind of graph. So what can I do to be able to bring up my expectancy value in terms of the dollar amount to be above $100? I would drop. I can already see very well. Look at here. Look very, very clearly here. Even if I minimize this, you can see I'm having an average of 11 trades per day. There are some trades, some days this strategy is even taking 15 trades, 16 trades, 17 trades, even 20 trades, but an average of 11 trades per day. So I'm going to reduce my trade frequency and only go for A+ setups. I'm also going to implement trend filters to be able to filter whipsaws and consolidations in the market to only go for A+. And with all of this, my win rate should be able to increase to maybe about 50%. And if I'm going for a risk to reward of 1:2, because the strategy has a risk to reward 1:2, about 1:1.5 or 1:2, my arrow expectancy in terms of arrow multiplier is going to increase to maybe about 0.3 arrow or about $100. At that point in time, boom, I can deploy the strategy in live market with confidence because I know my strategy is having a good expectancy value. So now, what can you do on your side? You don't have a total of, and I can even still go on the chart just to see what happened. You can see even on the chart, you can see all my entries. That was my entry right there. Short is right there. TP is right there. You can see everything. Look, short is right there. TP, profit target is right there. You can see how the strategy works. Now, you don't have, the luxury to open 1,336 trades to be able to ascertain if your strategy is working. How can you do it on your side? This is the assignment I'm going to give you guys, and pay attention. I want you guys, take GUMVRO. The GUMVRO strategy is having an expectancy value of almost about $250 and an expectancy value in terms of a dollar amount of about $250 and an expectancy value in terms of arrow multiplier of about 0.8. Expectancy value of about 0.8. Meaning if I'm risking $500 on every trade, and whether that trade is a winner or a loser, I already know over a period of time, I'm going to be getting at least or about 0.8 arrow, or about $300 on every trade I place. That's the assurance I get. So how can you do it on your side? I want you to take even the GUMVRO strategy or any strategy you are using to be able to ascertain if that strategy can work in real market conditions. This is what I want you guys to do. Go back to the drum board, open a demo account. Even when you are trading with prop firms, you are still trading on a demo or a simulated environment. So open a demo account. If you know you're going to be able to purchase, say a 50K prop firm account once you go live. Open a demo account check the links on the video description. You're going to see my recommended Forex brokers. Go on that Forex broker and open a demo account. If you are trading CFDs, all right? And if you are trading futures, go on even TradeOver. TradeOver will give you the opportunity to open a simulated account. TopStep will give you the opportunity to open a simulated account. Open a simulated account and take at least 5 trades per day. If no matter the setups you have, no matter the strategy you have, you can be able to have 5 trades per day across different setups. Document all your winners, document all your losers, and I want you to do that for 20 trading days. If you do that for 20 trading days, you're going to have a total of 100 trades. Now, that's a reasonable sample size. You're going to have a total of 100 trades. Go back now and calculate the expectancy value on that particular strategy. If the GUMVRO strategy or any strategy, go back and calculate. It's simple. You take the win rate on, let's say the strategy was having a win rate of 55%, right? That's 0.55. You multiply by the average. Let's take an example to say, okay, you are using GUMVRO, and GUMVRO is having a win rate of about 60 to 70%. So let's use a 50K for an example. And maybe Johnny took a total of 100 trades, and you had a win rate of 60%. Meaning, if you want to calculate our expectancy value, remember our formula is very, very simple. This is our formula right here. So our formula is right here. This is our formula. And the expectancy value you can see is win rate times average winner minus losing rate times average loser. That's it. That's how it works. So here, let's calculate. Let's do for GUMVRO on someone who has taken a total of 100 trade. You took a total of 100 trade. You have a win rate of 60%, right? And you're on a 50K account and you're going for a risk to reward of 1:2. We're going to do it for someone who is going for a risk to reward of 1:2. And we'll also do it for someone who is going for a risk to reward of 1:1.5. So let's start with someone who is going for a risk to reward of 1:2. So risk to reward of 1:2 will be equal to, what is our win rate again? 60%, which is 0.6. We multiply that times our average winner. Since we are going for a risk to reward of 1:2, meaning for every winner, we're going to make 2% of our account, which is $1,000. And for every loser, we're going to lose 1% of our account, which is $500. So this is times 1,000 minus, what is our losing rate is 0.4 times what is our average loser, which is just one arrow, which is $500. So the answer here, let's quickly calculate, is going to be 0.6 times 1,000, which in our case, we can be able to even put down, is going to be $600 minus, so we quickly calculate 0.4 times 500. So minus $200, which is equal to $400. Meaning our expectancy in terms of the dollar amount for this strategy is $400. Meaning you are rest assured, you know that even if you continue trading with this strategy, whether it's a loser or it's a winner, you will make an average of $400 for every trade. Now, this is very, very good because it's above $100. It's very, very good, right? Since it's a 50K account and for this sample size, it's very, very good. Let's calculate the expectancy value in terms of the arrow multiplier. Arrow multiplier is just simple, right? Arrow, let's just say arrow multiplier. So in terms of arrow multiplier, it's simple. It's the same calculation, 0.6, which is our win rate times our average reward. So our average reward is what? Is 2 arrow. Minus our losing rate is 0.4 times our average reward or our average loser. So our average loser is just 1 arrow. Remember, it's 1 arrow. So times 1 arrow. So let's quickly do the math to see. So in this case, it's just going to be 0.6 times 2. That's 1.2 minus 0.4 times 1, which is 0.4. Minus 0.4. Minus 0.4. 0.4. Good. 0.8. Can you guys see? Remember I said for a strategy which is exceptional, which is exceptionally profitable, the expectancy value in terms of arrow multiplier should be between 0.3 to 0.8. What is the value here? 0.8. 0.8 arrow. Meaning this goes a long way to show you how exceptionally profitable the GUMVRO strategy is. I want you to do it on your side. Go back, please. Take your time. Don't rush to buy a Profirm account. Don't rush to just get... Take your time and just take just 1 month and do this. You'll be saving yourself hundreds upon hundreds of thousands of dollars. You'll be saving yourself your hard-earned money, which you would have blown it if you just went and bought a Profirm account by just taking one strategy from Ndemazeah or from one guru on the internet, or by just doing your price action and you ask you what's your strategy, you say it's price action, and then you rush and start trading with it without even determining the expectancy value on that strategy. Go back, I already told for GUMVRO, do this for GUMVRO, do this for any strategy of your choice, and if your expectancy value in terms of arrow multiplier is less than 0.3, discard that strategy or go back to the drawing board and see what you can do on that strategy to bring up the expectancy value in terms of arrow multiplier to be above 0.3 arrow. I showed you guys this strategy. Even though we made $89,000 over a period of 5 months, I'm still not satisfied because my arrow multiplier on this strategy was 0.23. I want it to be above 0.3 to 0.8. And you saw what happened with GUMVRO. Arrow multiplier for GUMVRO is 0.8. There you have it, guys. Please go back, do this. After a month, come back to this video and share your experience. Share your experience on the comment section. What was your expectancy in terms of array multiplier? What was your expectancy in terms of the dollar amount? Please come back and share. It will mean a lot if you guys can really go and do this exercise. Give yourself 20 trading days. You can be able to do it after 10 trading days to just see how it goes. But for you to be able to really have strong data, which can be able to ascertain or give you an average of what can happen after maybe a couple of months or even years, I want you to have between 100 to 200 trades. That's what I want you guys to be able to do. And please do that. Come back to the comment section of this video. Share your results so that we all know. Even if you are not doing it for GUMVRO, go and do it for your own strategy. Any strategy you are using, go and do that on your strategy. Come back to this video and share your experience. And trust me, I'm going to reply to every comment on this particular video. Just also going to be able to tell me how you guys are able to configure your strategy to work. And I'll do what I can do on my side to assist you guys on having that rock solid profitable strategy that's still going to perform months to months, years to years. The reason I'm still making money day in, day out after 12 years of trading is because I incorporate this on any strategy I use. Any strategy you hear me talking about, this is the first thing I determine. And if my expectancy value is low, I will know, oh, bro, even though I was lucky last month and I made $20,000, bro, I don't want to rely on luck. There's a clear indication this strategy is still not going to work after 2 months. It's still not going to work after 1 year. It's still not going to work after 2 years. So guys, please go do the assignment on your end. Do your own findings, do your own calculations. I've helped you guys on the mathematics. This is more of statistics, right? Advanced statistics, but when it comes to trading, there's a bit of statistics you need to know. There's a bit of mathematics you need to know. If not, don't worry about trading. All right? You can know, I hate math, I hate statistics. No. Trading is a game of probabilities and a game of statistics. The basics you need to know is what I've shown you guys on this particular video. Make sure you check my free Telegram community. Link is going to be on the video description where you can get updates on me on a daily basis. If you want me to mentor you from A to Z on how to trade Forex and futures, check out Godlove University course. Link is going to be on the video description. If you're looking for my recommended brokers I just mentioned, check the link on the video description and you're going to be able to use my recommended brokers. And if you're looking for a prop firm, you already have a strategy that's working, you've already calculated your expectancy value and you know that this strategy is working, check out the links on the video description as well to use my recommended Forex and futures prop firm. Check out this video, which was a video I made explaining how you can be able to make money on Forex and futures using the strategy that I gave you guys with an expectancy value of above 0.8 and it has gone viral. Check out this playlist, which are videos I have programmed for you guys to use. Click here to subscribe to the channel and I'll see you guys on these other videos.